Pradeep Agarwal, President of Wipro Consumer Care and Lighting, joins us right now on the show. Good to have you. Thanks so much for joining in. And I'll start off with what you did in FY12. We need 22% growth. Am I being slightly greedy when I'm expecting more in FY13? Do you think you can better that?
Good morning. We have three businesses. One is our consumer business of India, which is Yardley and Santur. The second one is institution business, which is our commercial lighting and our furniture business. And the third one is our international business, which was acquired a few years back, which is our Unza business. I would say that Santur and Yardley has really done well for us. So Yardley continues to outperform our expectations, growing at about 60% in India itself, largely led by Deo growths. Santur relaunch has worked well for us. Internationally, our Enchanter brand and our male toiletries have done well. We expect that this year, hopefully, if the environment sort of improves, our commercial lighting and our furniture business will do well. So we've got all the products, let's say, in the LED area where it's the most comprehensive range that we have got, and also in our modular furniture and chairs. So hopefully, if that sector starts performing, I think one would be happy with similar growths.
Right. What about margin performance for the year?
So we normally keep our margins close to about 12%. We closed last year at about 11.8%. This was largely because we launched some premium products which helped to mitigate cost impacts. As I said, in commercial lighting and furniture, our premium chairs and our LED focus has helped us. In Santur, categories like Santur Glycerine, which are premium soaps, which have done well for us, has helped us, and Yardley, which is a premium products, has helped us. So to that extent, I think our margins was in line with our expectations.
Would you be looking at product price hikes then in the coming year as well in the wake of rising costs? What's the strategy in maintaining margins?
So I would say that if I look at my commercial lighting furniture, where steel prices and aluminum prices, something that one needs to watch out for, we're not seeing any immediate increases in prices there, and I don't think we need to increase prices in that area. What we saw till March, let's say in the consumer area for, let's say, brands like Santur, where palm oil is critical, till March the prices were easing off, but April has suddenly seen a spurt, almost about 20% over March this year. So one would wait and watch in terms of seeing how the oil prices or vegetable oil prices move over time, and then take a call in terms of any price increases if required.
Right. Vineet, give us an update on the infra foray. I mean, is it essentially done because there is still a lot of opportunity in this space? Or as a few people would say, I mean, it's a bit of a forward integration into how your lighting business could do as well. What's the story here, and how aggressively would you look to continue in this field over the next, say, over FY13?
So I would say that in the commercial lighting space, we are clear that we will spearhead the whole movement into LEDs. As I said, we have got a most comprehensive range there. The margins tend to be better there because the prices are a little higher, and we are seeing the consumer or the customer willing to spend on products like LEDs because even though the initial costs are higher, especially in office spaces, the running costs are significantly lower. And to that extent, with power costs being high, and especially with a lot of buildings being run on generators, we believe that the ROIs have become under 2 years, and so it makes sense for customers to move into LEDs. So that's been a clear focus. So if you look at it, the green buildings today in the country, the certified green buildings, we've done close to about 59%, or lighted up close to about 59% of green buildings. And that's helped us because of the fact that our overall package towards, let's say, LEDs have been very aggressive. In the office furniture space, we see consumers, though, we're not seeing so many orders getting closed or so many buildings getting, or new offices coming up. But whatever is coming up, we are clearly seeing that the consumer is looking at a much better quality. Probably they feel that you're putting up an office for a long-term purpose rather than a short-term purpose, and therefore the movement towards better products or more premium products are clearly seen. So our chairs have grown close to about 40% last year, and we think that that's something that we like to drive. So chairs, you get an advantage of replacement market as well as the fact that new offices are coming up, and if consumers or customers are willing to look at better value products and with more comfort, I think we'll have an advantage there.
And we wish the advantage stays with you, Neet. Good going for FY12 in this business. Thanks so much for taking the time out and joining us and giving us that quick snapshot.